OMG. I just finished an algorithm that's gonna pass prop trading challenges. Just to put that into perspective, a $3,000 investment around this time last year could have potentially made me a millionaire by now. Looking at the visual backtest, you can see that if I were to consistently be in challenges with this algorithm over the course of the year, I would have won everything but maybe 2 challenges where you could see the biggest drawdown. Looking at the backtest results, you can see that drawdown right here. The biggest drawdown is 24%. It might sound like a lot, but it's actually really good for a lot of reasons. First of all, you can see that the overall return for the year is over 100%. It's closer to 120%. That means as smooth as this performance is over the course of the year, it's still aggressive enough to pass challenges. It also makes it a great general algo to run on an actually funded account or a personal account. Challenges are pretty rigorous, so we have to trade pretty aggressively. And with a funded account, fully funded, or personal account, we wouldn't be trading this aggressively. So basically, if we were to take a fifth of the risk that we're taking here, we'd still be looking at a 25% return, and our drawdown would be about 5%. So let's take a closer look at this back test. You could see recovery factor, which is similar to risk reward ratio, is nearly 3 for the entire year, which is incredible. The Sharpe ratio is also great. It's about 2.5, which is really good. Anything over 1 is usually pretty good. And then as far as recovery factor, anything over 2 will be able to pass a challenge. So we're doing good there too. I also like that it took 588 trades over the course of the year. It basically means I won't have to sit around and wait for weeks or days for a trade. And then as far as prop trading, you also have to be a little bit consistent as far as how often you trade, unless you're just making multiple percent, like 3 or 4% on one trade every other week. That might work, but I like to, be very consistent as far as how often I trade, so I know if I need to scale it down a little bit, if I'm moving towards the goal really fast, or vice versa. Now, the win ratio isn't spectacular by the standards of what you'll probably see online as far as like the trading teachers and gurus that are talking about this. Nearly 80% of the shorts were won, and then you could see about 75% of the longs, which a lot more longs were taken than shorts. So that's probably why the percentage is a little bit lower. A high win rate can actually be kind of deceiving. It doesn't matter as much as you might believe, or some people might make you believe, especially when you're trading like us using dynamic risk that changes as the volatility of the market changes. Think about it this way. You can have a 90% win rate and win $1 on 9 trades and lose 1,000 on the 10th and still have a 90% win rate. With that simple test, you can see that it doesn't matter as much as you might think it does. It looks like the top sessions in this algorithm are the New York session and the London session. Trading seems to ramp up at the beginning of the London session and die down a few hours before the end of the New York session. So if you're in America, basically it starts trading in the middle of the night and then it trades all the way through the early afternoon. And then as far as the days of the week, that's pretty consistent. It looks like it's trading about the same every day. Friday seems to be the most volatile day as far as profits and losses. Each day of the week over the course of the year is profitable compared to the losses. And then Wednesday is the second most volatile day, which is pretty interesting to see. And then the last thing I want to look at is how long these positions are staying open. You can see that the average position hold time is 18 hours, just under a day. So you can consider this algorithm a day trading algorithm. But here the longest hold was 6 days, 160 hours. That's basically like opening a trade on Monday and then closing it the next Monday. It's not too bad. Let's take a look at the actual coded strategy that we're using. But first, I want to emphasize that this is a business. In business, you're going to have expenses, and that's our challenge cost. And I'm saying this because I'm about to pay for a challenge and show that part of the journey since the algorithm is already done. When we're thinking about business and business costs, think of a retail store. They basically have to pay rent, they have electricity, they have salaries. They also have to factor in other things like returns. How many items, what percentage of the sales they're making are actually being returned by the customers? Some businesses like clothing stores also have to account for negative things that you might not even think about in the beginning, like theft, for example. Now, considering that you're only profitable after all of these things are accounted for makes being profitable a little bit less straightforward than you might think. Now, if your salaries theft, rent, and all those expenses are $25,000, whether it's the course of a year or a month, and customers give you $50,000, what you have left over is about $25,000, and that's what we call our profit margins or net revenue. All right, now stick with me, it's getting interesting. Each prop firm, it's a little bit different as far as how much it costs to get into the challenges and then the payout percentages and those things. But typically, just remember that you have to make about 0.5% of payout in order to break even on each challenge. So basically, easy formula is take the amount of challenges that you pay for, divide that by 2, and then that's basically the return that you have to be paid out in order to break even. If you think about it that way, it's actually a much easier business to run than a retail store. It basically leaves our focus on what percentage of our challenges can we pass on average, and then receiving a small 0.5% payout per challenge that we pay for. So let's take a look at this $50,000 account as an example. If I basically pay for 2 challenges, I fail 1, and I pass the second, I've basically spent $500 on challenges. I'll get a refund of $250 for passing the second challenge, but let's ignore that for now just to make the math easier. If I get a 1% return, remember 2 challenges divided by 2, that's 1, the payout is going to be $500 on that 1%. Now, after I get that $500 in my bank account, I'm trading a $50,000 account risk-free for the rest of the time that I have the account. So let's say it's even worse. I'm not as good of a trader. My algorithm only works a few months out of the year, and I end up paying for 6 challenges, passing only 1. Using our formula, I divide those 6 challenges by 2, which means I need to make a 3% payout to break even. So in this case, I spent $1,500, and the 3% would give me $1,500 to my bank account. Again, this is ignoring the refund that we would get on the past challenge. Basically, we could, let's say, lose 19 challenges and pass the 20th. It's terrible, but for the sake of the example, divide that 20 challenges by 2, and we basically need a 10% return to break even before we're trading the account risk-free, or the multiple accounts. Now, I'm not saying that's good. It's very, very bad. But as you can see, the business model itself, as far as prop trading, seems scary, but it's not that scary at all if you have the talent and, in our case, a pretty decent algorithm. So let's take a quick look at the actual code that's making all this possible. All right, so super quick, let's just run through this. We have a couple of input variables, a couple of regular variables. Input variables we're going to be able to change while we're trading without having to recompile the code. It's an on-tick function, so every single time the price moves, this is going to run. And I'm bringing in some indicators here. Basically 2 Bollinger Bands, an outer band, which is the 3 deviation, and then an inner band, you can visualize it, with the 2 deviation. I also have an exponential moving average here, average true range, and then some comments that we wrote a long time ago. Now, as far as trading, again, it's a double Bollinger strategy. So it's here, if positions open equals 0, we're basically going to both buy in an uptrend, sell in a downtrend, and buy in an oversold condition, and then vice versa for overbought. So you can see here, if exponential moving average is between the top 2 bands, that's an uptrend, you buy. If it's between the 2 lower bands, you sell. And then if it's below the very bottom lower band, you buy, and then vice versa for sell. Now, as far as managing and getting out of the trades, basically what we're doing is we're saying if total pips is greater than ATR. So we're using the average true range as the take profit. And in that case, we're basically going to close everything, close all positions. Okay, then to manage a trade that's open, we're basically checking if the last opened trade is less than negative ATR, our take profit, multiplied by 3. Okay, so 3 times larger then our take profit is when we're going to scale in, and then we're just opening another trade with the same parameters. By the way, make sure you check out FX Terminal if you are an algo trader. This is going to be the platform. It's going to have all sorts of features. We're going to be able to talk on there, share code. This strategy is going to be featured in the live algo strategy section. So you'll be able to see the signals if you're an FX Terminal member. And I'm excited to manually trade using this feature. If we see 7 or 8 trades deep, that's going to be a highly probable position that we could take. So very exciting times with FX Terminal right now. So check it out. I hope you become a member. The ATR is what allows us to adapt to market volatility, but I needed to know what parameters work best with the ATR. I like the strategy itself, but the backtests weren't going so well because I didn't know what parameters to use. So what I did recently was optimize the strategy in MetaTrader so I can know for sure which parameters to use, which is how we got to such a good spot with the algo. All right, so here are the optimization results for just one pair, the pound dollar. And as you can see, there are several parameters that give us great results. Among the best results, you could see the top 3 here. The recovery factor is between 2 and 3. Remember, to pass challenges, we need a recovery factor of 2. And as far as Sharpe ratio, a 30-minute time frame, 15 period, gives us a Sharpe ratio of almost 6. And you can see several other phenomenal Sharpe ratios in the range of between 2 and 4. Again, this would be really good to trade on an account. Not good enough to get funded and pass a challenge, but a fully funded account maybe, or a personal account. This algorithm would work really well, and we have several parameters that we can use. So the next step is to just go for a challenge. I plan to document everything, and I'm gonna start with the $50,000 challenge because I can use the profits to scale up to the larger accounts. In best case, I could be trading millions with an initial investment of $250. Those first few accounts could just pump out money for me to buy more and more challenges to the point where every month or every other week, I could be going for $1 million challenge. And at that point, that's when our business is really gonna have a lot of momentum. So let's see how this goes in the next video. I wanna start shouting out some of you guys writing comments and stuff like that consistently. Thank you guys for watching. Let me know how I can make this channel better in the comments. And we'll see how this goes. Until next time, may your trades be green and your code compile clean. See you in the next one.